Hey, how's it going, everybody? Welcome back to another IFVI budgeting video. So in this one, we are going to actually look at two different budgets using the examples from the previous video where we have the minimums of our debts and the optimized version of our debts to include some optimization of the budget itself. So we're going to go line by line here, talk about essentially fixed expenses, essentially variable expenses, nice to have expenses, and future expenses. So this might seem a little overwhelming at first, but we're going to go through it all and I'll explain it all. And eventually I'll probably turn this into a live Google Sheet so you guys can just take it from our share drive and fill in whatever's appropriate for yourself. So for this example, I kind of wanted to give a all-inclusive, someone just living a normal life, and they're not really missing out on anything, they're not really cutting too much out of their life. They're paying minimums on things, and they're kind of just going through the daily motions. So this individual in this example hasn't really been strict with themselves. So in the optimized version, we'll see what we can change to kind of make this situation a little bit better. So first, let's focus over here on the income. You have your two bi-weekly paychecks here. You add them together. This is your monthly total, your monthly salary. So we're working with about a $60,000 annual salary. They currently have about $4,500 in their savings and a little under $400 in the checking for a total of almost $5,000 saved up. That's kind of their nest egg right now, right? Okay, so let's start going through some of these essential fixed expenses. So this individual owns a home, so they have a mortgage. They're paying about $1,250 a month. They pay for their trash. They have a cell phone bill. They have health and dental. They have life insurance. And then, of course, there's 7 lines of debt, right? And these are the minimums that we went over in the previous video. And so in the budget amount, you add all these totals up right here, and you can see this is the total. And these Excel spreadsheets have some formulas already pre-programmed inside of them, so that way, as you start making changes, it just does the summaries automatically for you. And you can see here, spent amount. This column is for what the individual has already paid for this month. So you can see they have not yet paid their cell phone bill. So in the remainder column, they still owe $75 to one of the bills. All right, moving on down to essential variable expenses. So once again, these are expenses that fluctuate a little bit more than the fixed expenses, but we're going to budget for them as best we can, right? So we're going to make kind of like averages. All right, so for groceries, we're talking maybe $350 a month. This is how much we've spent. We have water, gas, and electricity for our home. Let's say we own a pet or two, so we're budgeting about $200 between food, haircuts, just maintenance on the animals. Your car, so for gas, maintenance, if you pay to get it washed, home maintenance, small little projects that pop up, things you need to buy, whatever. Your biannual property tax. So here's one of those examples where the expense is not occurring every single month, but in order to mitigate, getting hit with a $300 to $600, twice a year expense, we're going to throw it in and add it in every single month. And whatever excess we have is going to go into our savings account, but at least we are budgeting for it. And then random household items, whatever that may be, maybe something that you want to put in there, maybe something you need or you think you need. And then of course our $50 investment that we had talked about in the last video as well, right? So all that added up, about $1,200. We still have $341 that we could/will need to spend if we budgeted this appropriately. And that moves us down to our nice to have expenses. So these are ones that vary obviously month to month as well, and they're things that we could live without if we need to start really chopping off some of our budget. So we have restaurants in here, going out to eat a few times a month, your cable bill, buying new clothes every month, moves and activities, your internet, that's pretty reoccurring. The internet is down here in the nice to have expenses as opposed to your fixed expenses because it's something you could definitely live without. And then gifts, so the occasional gift you might need to buy. So here's an example of going over budget, right? So we spent already $254 on clothing, so it's a negative $54. So for the nice to have expenses, the remainder is what we can spend, right? So if you add to these all up, minus the 54, it would be a lot higher than 78. However, we've already gone over budget new clothes, therefore we need to take that money away from something else. So this is one of those be flexible concepts, right? It's okay that we went over in this one, so we'll just make up for it in not going out to eat once or twice, or cutting back on going to the movies, or going to play putt-putt, or whatever activities we like to do. So $78 is left, and that moves us down to our future expenses. So these are 3 events that we have coming up in our life that we can project and foresee. So we're going to put them into the budget, and all of this money is probably going to go to either a separate savings account or into our single savings account. And so we're budgeting it as if it were an expense. However, we're moving those funds into our savings account, so when they do occur, we have that money, and we're not having to put this on a credit card to where we're going to be paying interest, and it's going to cost us a lot more. And this is how you really mitigate unnecessary debt, right? So 6 months from now, we have a trip to Hawaii. We're budgeting $150 a month. We've currently put $75 away for it already. We want to buy a new bed in 10 months. That's how much we budget every month. And in the next 2 years, we want to buy a brand new car. We're going to try and pay cash for it as much as possible. So we're budgeting about $500. So for almost $1,000 a month, we're trying to save in advance for things that are coming up. We still owe ourselves $225 by the end of the month. And if you look over here, this is a summary of future expenses, right? So this is how much we still needed to save as of last month, and then after what we've put in here this month, this is the current. So whenever you right click here and you click move or copy, and you make a copy of this, create copy, okay, and then it pops up a new tab and you rename it February, and you're going through and you're zeroing out your spent amounts and your whatever. You go back to January, you highlight this, you click copy here, and then in your February tab, you highlight these, right click, and you click paste special. You go values, and then you will click OK. I'm not going to click OK right now, but you click OK. And just pasting the values means that the actual dollar amounts will get replaced over here, and this formula that we have won't get copied and pasted over, because whenever I adjust this, it's going to fluctuate over here. So if I change this to 0, as you can see, this went back up to 900. So it just makes it easier, so that way you're not constantly manually changing everything. And so you do that every single month, right? And so the last month, once we hit February, it will have this. So that's kind of an easy way to keep track of what your upcoming expenses will be. All right, so let's look at how all of these things, if we're, like I said, just living that normal life, what they're going to look like as far as our budget, what we can actually afford. So this is the total estimated budget without future expenses. So we're budgeted for about $4,200. We're making $4,900, so that's a decent excess. However, once you include those future expenses, we're looking at $5,100. So with the budgeting of future expenses, with the month-to-month reoccurring things, we're actually going over about $200 something. So obviously going over budget, busting budget, before you even start spending money is a bad thing. You want to give yourself enough wiggle room, or as much as you could possibly think, based on how much you go and splurge, or your impulse buying, or however you are with your finances, is how much wiggle room you need to give yourself. So the fact that we're already going over with our budget is not a good thing. But I wanted to show you an example of just a full life, just carefree, kind of just doing whatever. Anyways, so this remainder is, as you can see here, another formula, a summary of all the expenses that we have left to pay. So whether it's a strict bill or we've budgeted that we will probably reach that amount, this is how much we need to put in still to include our future expenses. This remainder is our fun money. So we have $78 left of what we can spend. We do not want to bust this. This is where we should be saving most of our money to begin with. So we have an excess right now of this much money. However, once you add in the remainders, as you can see, we're going to go over. So it's structured this way, so that way if your income changes, you can change it up here. The formulas on this column will fluctuate as you change these or change everything here on the left column. I mean, you can really see right here, this one compared to this one. Am I going to go over budget before I even start spending money this month? And if so, you definitely need to look at where to start cutting. And so it's structured this way. Like I said in the first video, you want to have your least necessary expenses at the very bottom. So Your future expenses, maybe you don't need a new bed within 10 months. Maybe you can wait a couple more years so you can drop this down to $50 a month. Or maybe you can't get as nice of a new car as you wanted, so you drop this down to $350 a month. Or maybe you just can't afford to go on that vacation, you cut this out completely. Right? So these are things that you don't absolutely need, but you kind of want in the future. However, if your goal is that you are for sure going to get these things, and you want them more than you want to have these nice to have expenses, you can flip-flop these two. It's all dependent on what your goals are. And then of course next in this example, this is the area where you start cutting the most. You cut out how much you're going out to eat, what new clothes you're buying, your activities. You can drastically reduce these numbers in order to get ahead with your total budget. And then your variable expenses are the next thing that you can start cutting. So if you're spending $350 a month on groceries, and you're like, well, that's a little bit too much, I want to cut it back to $300. So instead of buying a certain name brand, whatever, you start buying some cheaper brands, or whatnot. So there's a lot of areas to cut out on, and that's what we'll look at in our optimized column. So hopefully this didn't overwhelm you, and once you dive in and start adding in these numbers, it makes more sense. And these can get updated every single day, or every time you spend money, or if you want to do it just a couple times a week, and you keep your own pencil log. Keeping this up to date is really good, and it's super easy just to make a new tab and then start the next month, because you just put a 0, or you can highlight and click clear contents, and then it will go down to 0. So pretty easy stuff. All right, optimize. So this is our budget. It's a mirrored image, except we've optimized things. Everything that's been changed has been highlighted in yellow. But the debts, the 7 debts that we talked about in the previous video, are in here as well. So I believe it was $217 extra in order to optimize our debt payment, right? So we're actually spending more money on these things. So in order to mitigate that, we've taken away from a few other sections, right? And so not a lot of things. We've only changed, we got 3, 5, 6 things that we've changed in order to ensure we're under budget. All right, so let's look at the first one, the mortgage. So in this example, this individual decided to buy a cheaper home, a starter home, maybe a condo instead of a house. Either way, their mortgage is significantly lower. It's $400 cheaper, so that's a nice chunk of change that you can put elsewhere. You go down here, and so instead of getting your pet groomed, which costs you $50 every single time, you do it twice a month, we've actually reduced that by $100 from you cutting your own pet's hair, right? So you get some clippers, one-time purchase, and you're able to save yourself $100 every single month, and that's a nice chunk of change right there. Your car wash, maybe you start washing your own car, so you save yourself $75 a month because it costs you $15, $20 every time you do it, and you do it once a week or however much it is, right? So you start doing things your own as opposed to paying others to do it is really how you can very simply start saving more money to put elsewhere. And let's go down here. We cut out $70 from our restaurant fees. We're going to start cooking at home more. It's going to be a lot cheaper. We've reduced our movies and activities and clothing by $100 each, and so that way we're not going out buying new things that we don't need. Only if we need a new pair of pants for work or whatever, that's what we're going to spend our money on. Activities, we're going to start staying at home, doing whatever, maybe developing a hobby that doesn't cost a lot of money or whatever, right? So we've reduced both of these by $100 each. Everything else has stayed the same. If it's not highlighted, we didn't change it. And you can see here the drastic difference between changing 7 things and optimizing our debts. So we're paying more in debts, and we've only changed 7 things, and we've saved ourselves $745 every single month. And we really didn't make a huge drastic life difference. All we did in this example was choose a cheaper home, start doing a couple things ourselves, and then cutting back our activities on what we're spending our money on, finding cheaper or even free hobbies and stuff like that, right? And we're saving $745 a month. Now you can see we're definitely under budget, which is good. So we're making money every single month. We're able to put more in our savings account every single month, and that can eventually go towards either your nest egg, if something, if an emergency comes up, or if you want to spend more money on your trip to Hawaii. If you went over budget on that, it's no big deal because you have a lot of extra in your savings, whatever, right? It gives you that cushion to do whatever you want with. Or you could even increase your investments to $100, right? Because you have the excess cash. Um, Whatever. Either way, you have a lot of money to play with at this point in time. You can throw more of it at your debt and really start reducing that even more. That would be a suggestion. So once you've optimized your budget and you realize, hey, now I have an excess of funds, I need to figure out what to do with it in order to continue to optimize my financial status. And this is where you start off with this example. You figure out how to optimize it to include your debt, and then you keep refining, and you keep refining month to month or quarterly or whatever it is. You're always looking to make your finances better. It doesn't take a lot of time. If budgeting this specifically or excessive is too much for you, you don't have to do it this way. There's other ways you can do it. But these are just two easy examples. It didn't take me too long to build these. And I kind of just use fictitious numbers and summaries that I pulled from the internet, like how much does this cost on average, like nationwide averages and stuff like that. And I mean, buying a new car, a new bed, and a vacation all wrapped into living a pretty normal lifestyle with just a $60,000 salary, you can see how it's definitely possible, right? So hopefully this helped. If you have any questions, obviously ask, and I will explain it, and I will most likely put this in a link so that way you guys can download it and plug and play with whatever you guys have going on in your own lives. So appreciate you guys listening and watching, and let me know if you guys need anything.